Let's say you want to buy $1 million commercial property and you have $300,000 to $400,000 in available cash for your deposit and stamp duty. However, you're maxed out. You can't borrow anymore. Let me introduce you to Lease Doc Loans and how they work. So with a Lease Doc loan, you are purely relying on the executed lease agreement or the lease income from that specific tenant. How they work is the lease income needs to cover the annual interest expense by a certain ratio, generally 1.4 to 1.5 times cover. Now, for this to be viable, you need to have the right structures in place. You need to borrow under a company or a trust, which you definitely need to speak to an accountant about. You need to have the right tenant in place, given that it's an investment property, and you need to have the right character and risk profile, being a guarantor to the loan. So even without an income or the capacity to service the loan, the bank will still lend you the $700,000 with the right lease and structure in place.